Welcome back on the AM show. Now, as we go, yes, we're going to be having some interesting conversations as far as the GRA is concerned. But first, let me find out from you. Are you a resident of Ghana earning income abroad? Have you declared and paid taxes on the income that you earn abroad? The GRA is giving an opportunity to all resident persons in Ghana, that is individuals and entities, to voluntarily declare their income held abroad within a specified window in order to be relieved of payments of penalties and interest for non-disclosure or false or misleading statements. So take advantage of the policy now. The GRA can be reached by email on info@gra.gov.gh and on WhatsApp on the number 0552 990 000 and 0200 631 664 or call toll-free number 0800 900 110. Just take note of that. And you might be asking, who is a resident? Well, the tax laws define a resident as any individual who is a citizen with a permanent home in Ghana, residing in the country throughout the year, is present in Ghana for at least 183 days in any 12-month period, and that's about half of the year, that begins or ends within the year, is a government employee or official posted abroad, is a citizen temporarily absent from Ghana for not more than 365 continuous days, and maintains a permanent home in Ghana. So again, the GRA can be reached via email on info@gra.gov.gh, by WhatsApp on 0552 990 000 and 0200 631 664. Or you can call their toll-free number 0800 900 110. Now, joining me in the studio for a conversation on this, I have Mr. Paul Ahe. He is Chief Revenue Officer and Head of Exchange of Information Unit. And we also have Michael Edu, who's Head Compliance and Enforcement with the GRA. Gentlemen, good morning.
Good morning. Good morning.
The residents must pay, eh?
Exactly.
Let me start with you, Mr. Ahe. Give us a proper breakdown of what this tax on foreign incomes is all about.
Thank you very much. The discussion these days makes it look as if it's a new tax. But the fact is that in 2015, Ghana actually amended our income tax law and introduced a new way of taxing resident persons. And so we used to do what we call the territorial concept of taxation, and we moved from that in 2015 from 2015 to now, we are doing what we call the worldwide concept of taxation. So let me just break down the two for you. So with the territorial, which we were practicing in the past, what it meant was that we only tax resident persons on income that is sourced in Ghana. And so income that is generated in Ghana is only subjected to tax. If you earn a foreign income during those days, you need to bring the money into Ghana or receive it in Ghana or transmit it to Ghana for the purposes of settling a debt or buying a movable property. And that was a bit cumbersome to implement. And so globally, we moved to what we call the worldwide taxation of income. What it means is that resident persons are supposed to declare their income worldwide from various sources to various jurisdictions on a yearly basis for tax purposes. And so that has been the approach that we are using currently. And so its implementation has been there, but we are trying to make it more effective this time around based on some international collaborations that we are having with other jurisdictions who can provide us with the necessary information for us to be able to implement it effectively.
So which category of people are liable to this foreign income tax? I mean, someone may be sitting and saying, I'm no expat in the country or something. I am not here. I'm not working with a foreign mission. I know some of them have arrangements. Is it that Kojo has a job that he's secured, remote work that he's secured in the US and he's earning dollars and he must account for that? What is the situation?
Exactly.
Break it down for
And
us.
so with your introduction, actually you define who a resident person is. And so you should be ordinarily living in Ghana as a citizen with a permanent home in Ghana to be able to pay this tax. it is tax for people who reside in Ghana. And if you are from other nationalities, you have to live in Ghana for 183 days before you qualify or you be counted to pay this type of tax. Or, as you said, if you work with a foreign mission, you are a Ghanaian posted to work with a foreign mission, we'll still consider you as a permanent resident in Ghana for tax purposes. And so any income that has its source in any other jurisdiction that you, the resident person living in Ghana, okay, engages in and receive that income is considered as a foreign income, which the law prescribes that taxes should be paid on.
Okay, so does this tax, like he said, for even clearer, explanation, does it affect Ghanaians living abroad, who is described as a resident person?
Okay, so to the extent that you are a resident person for tax purposes in Ghana, and you have that income elsewhere, you need to disclose it for tax purposes in Ghana. So we're not looking at during the time we are filing your returns where you happen to be technical.
So and I'm just saying this for clarity. If the person is Ghanaian but is working outside the country but has spent 182 days in Ghana, does that person qualify?
Okay.
Because you have the magic number 183, about half the year, right?
Yeah.
So just to clarify.
If you are an employee and the source of that employment income or the employer is a non-resident person, then that income from employment would not be subjected to this review.
All right.
And so just to add, if you are a citizen of Ghana and you are living in the UK permanently, you come 180 days. You don't qualify to pay taxes in Ghana because you wouldn't have lived in Ghana for 183 days or more. Okay. And so where you live permanently, which in the UK, you probably would have lived 183 days or more. Then you then qualify to pay your taxes in the UK and not in Ghana.
Yeah. So how is this tax calculated, and what are taxable incomes, by the way?
Okay, taxable income per the definition of the Act, we're looking at any income that is not exempted under the Income Tax Act. So we may have to look at the exclusions. Okay. Once we take off the exclusions, all the other incomes or earnings should be reviewed for tax purposes. And we're looking at the income of government organizations or entities. We're also looking at non-commercial entities of governmental nature. We're looking at pension income. And we're also looking at income for a cocoa farmer from the cocoa activity. And any other income that is explicitly exempted from tax. Once we exclude these ones, any other income should be taxed appropriately in Ghana.
Okay.
So by extension, your income that you earn from abroad, excluding the employment income that I made reference to earlier, all other flows of income should be reviewed appropriately.
Mr. Ahe, can foreign tax credits be claimed on this?
Absolutely. And so for the purposes of ensuring that people do not suffer double taxation on the same income, foreign tax credits that you have already paid in other jurisdictions where you earn income, which we are now considering as your foreign income, will obviously be used when you file your returns to make sure that those taxes, which we call the tax credit, are accounted for, and the difference is what you pay. And so when you are filing your returns, we aggregate all your income from employment, from business, from investment, globally. Then we make sure we deduct all deductions that are allowable under the law to arrive at your chargeable income.
I see.
Then this chargeable income If you're an individual, we apply the individual tax rate, which is graduated, and then if you're a company, we apply the company flat rate to arrive at your tax.
Right.
Then we grant you the foreign tax credit, as you have mentioned.
I see.
Then the net is what is payable to GRA.
So for those who are watching and contemplating and now thinking, oh, maybe I fall in the bracket, what will be the consequences, punitive or otherwise, of non-disclosure or non-filing?
The Income Revenue Administration Act imposes penalties for non-filing of returns, and it's enshrined in the Section 73. And on default, you pay a penalty of 500 penalty currency units, and any other day of default, 10 currency points would attract 10 currency.
Are these graduated?
No, these are absolute figures. So
Okay.
the 500 on default and 10 on any other day in default. That in the case of CST, it's 2,000 currency points on default and 500 currency points on any other day of default.
All right. So what are the benefits? We've spoken about the consequences if you don't, but what are the benefits? We have limited time, but you go ahead.
So the benefit is that there is a section in the Act that actually also gives what we call commissioner is able to grant you waivers for these penalties. Right. And it's under Section 74 of the Act. So once you come in voluntarily to actually make these disclosures, you will not be sanctioned as my...
So retrospectively, you will not be affected.
So
but
moving forward, we expect that you start doing the right things.
Okay.
But all the, I would say, the omissions that you committed in the past, when you come under Section 74 and you come in voluntarily, those will be waived.
In other words, in taxman's religious terms, go and sin no more.
Go and sin no more. Okay. Absolutely.
All right. Final words, Mike.
Just to encourage taxpayers as part of their civil responsibility to file their income tax returns religiously, and we make sure Ghana grows.
All right. Thank you, gentlemen, for having joined the conversation. Ghana thrives on taxes. We pay our taxes, the nation moves on. And those who joined us, Paul Ahe is head Exchange and Information Unit at the GRA. We also had Michael Edu Owusu, Chief Revenue Officer and Head of Compliance and Enforcement with the GRA.